$3,838.43. That is what $1,000 has become in the $1,000 challenge. You are listening to the StockInvest.us podcast, Trading Tips with Jim, as we're heading into week 29. And last week was yet another green week for the markets. Nasdaq up by 0.25%, saved by the Friday, while Dow Jones was up by 1.59%. And last week was the main event, was the consumer price index numbers, which came in quite good, I would say. They were actually the first time in months after months that inflation actually were down by 0.1%. Market, however, reacted negative, sending stock markets down on the Thursday, but up again on the Friday, making for a green week. Last week, as I said, was not much news coming out. It was the first set of quarter season. It was banks coming first out, and they of course are making good money. But the numbers, and I told you this before, you have to look behind the numbers and look what the CEOs are saying is much more important. And they are showing, like we have seen in other companies, that profit margins are under pressure. There is a consumer behavioral change. PepsiCo, for instance, which is a company I like, they managed to increase their revenue, but their actual sales are falling, and they expect it to continue and fall. But they have been doing a word which I told you also in this podcast, shrinkflation. They have shrunk their products, remaining the same price, so they push less volume for the same price. They manage to keep the revenue, but the consumer, the behavior of the consumer is changing. We saw these first signs of these things. Absolutely everything has been clear for a long time that this had to happen, because you can only offset inflation for a certain time on the end consumer before it takes its toll. But we saw the slight changes in credit cards reaching all-time high defaults on credit cards. Now we start to see it in the consumer behavior aspect, and as I told you, there will be some which are hit first, and the rest will be follow on how consumers change their behavior. And these things are the one thing, if I can learn anything in this podcast this week, it will be that for the quarter results that because we are now again getting quarter results, I will mention a few of them which will come this week. Listen to what they are saying. Do not pay so much attention to the actual quarter results, because that is already done. I mean, that's a done deal. That's the sale that they had over the last 3 months. Now it is about the future. And I expect to see a lot of revisions and cautions by the COO. Of course, they cannot go out and say that it will be terrible moving forward. They have to choose their words very carefully. They have to pack it in as nice as they can, but still they're obligated to you, the investor, to tell a little bit about what to expect. And I expect that the wordings, and I would follow the wordings, along with different other financial specifics in the statements. But in general, I expect the wordings now to be much more different than previous, and that the quarter season will be a tough one, and the one that will follow this quarter season will be even tougher. And as I said, PepsiCo, they managed to increase their revenues, but at the same time, they had less volume. They sold less items. Consumers are absolutely changing their behavior. They're drinking less cola. We saw this in the fast food industry, and you are going to see it across a lot of things. And Netflix is one of those who will report quarter's results this week, along with Domino Pizza. I think Domino will be on Thursday. So here I expect to see more the same things, that we will see a change. Will the investors react instantly on the numbers? Because Netflix might put out good numbers again, but again, I would pay a little attention to what is said and changes in the actual behavior. of the consumers, especially for Domino Pizza. These things will be interesting. My personal opinion is that I would stay away. I told you this many months ago, that I would stay away from these kind of investments right now, because they will be hammered, and get in when they have been hammered enough. Banks will follow, because banks are always able to offset cost on the end consumer. It's the name of the game for banking sector, until they go too crazy on the loans, lending out too much money, and the consumer are not able to follow up with the payments, and then you get into all these bank issues. But in general, banks make good money until they absolutely fail, when the end consumer is not able to follow up with obligations. Will it happen? Things are really showing that things just might be, as we move forward into maybe end of year, into first part of 2025, that we will see hardship in the housing sector. These things can put a lot of financial struggle all over the board. Now, where were we? We were about consumer behavior. Another thing that we see is that unemployment rate is ticking upwards. It is now 4.1, and we just need one more bad reading, and then we again have official recession confirmation. You have to remember that they just keep changing, especially the current governments, both in Europe and the US, just keep changing the term, the definition of what is recession. But now again, one more number, get more increase in unemployment rate, because it's been ticking upwards, and you have that second confirmation of recession. We are here to talk about investments, and I just slowly tell you this kind of repetitions from many podcasts. This saying, somewhat the same. We see a consumer change behavior. You want to be where your money is the safest, and you want to have a buying opportunity. So you may say, well, look at the markets, Nasdaq is just pushing upwards. I told you this might happen, but again, it's not the major amount of companies pushing Nasdaq upwards. It's the Magnificent Seven, which has been pushing the markets upwards since the mid of 2023, so for more than 1.5 years. Markets not been driven by a broad market, but a selected few stocks. Nvidia is one of the major pullers of the index. And you probably notice, because most of you haven't invested into the bigger companies, you are trying to pick all these smaller companies, hoping for the 50, the 100% return, maybe the 200, 300, maybe the 1000% return, which sometimes happens in the smaller companies. But going for fast money is also the way to lose money very fast, and most of you probably already done that. You should diversify. You should keep if you can, of course, depending on your amount of money, but you should keep a bit broader portfolio. Offset a bit of the risk. Make sure that you are in some of the major players, because usually they do good, and if markets crack down, they usually hold up much better. I expect big companies like Apple to do way better than many small companies. If market take a huge correction, you will take a big loss in Apple, but maybe even more devastating for smaller companies. Knowing that many of the small companies has had 2 hard years already, also mean that some of these companies have the possibility of going the opposite direction, actually to increase while markets go down. Happens to a few stocks, very few stocks, and they will be very hard to find, but usually you have to dig very hard to find where it's solid fundamental cases, meaning that they will have money in the bank, with able to withhold an economic downturn. Good position already brought down by lack of interest, because money been flowing to the big stocks. So there will be some of these companies which have a potential upside. Personally, and I also mentioned this many times, I have over the last years downgrading my positions in the market despite Nasdaq going up. I've been slowing down and currently sits, I'm not exactly sure on the percent, but it should be more than 30% in the stock market right now, because I don't see the huge potential upside. I like to do other investments and have money ready for a good buying opportunity, because I believe again there will be a good buying opportunity. And if you've been listening for this podcast for a very long time, 5 years now, you heard me when COVID came crashing, markets were crashing, I bought like crazy. Enjoyed the upturn. I sold last time Nasdaq was at 16,000. Now we are up at 18,352 points, so we moved even past that level. I rebought when we was down at 10,500. I started to rebuy, but as we got up to 16, I started to slowly sell out. I'm not investing more money into the market. I rotate a little bit on the positions I have. And you may wonder, what are your positions, Jim? Well, I am partially in the war industry because the warmongers are currently in charge, both in Europe and the US. And that just means that the war industry will be raking in money. And as I said in last week's podcast and the podcast before that, they have so much orders to fulfill because promise of increasing, national promises of increasing stockpiles of ammunition, improvements of all sorts within the defense systems. So there are orders for years to come to in the military industries. It's a super place to be. They will pay very, very solid dividends. Stock prices will remain quite good. They will take a fall if the markets fall. Also, these will take a fall. But in general, they will fall less and they will keep paying dividend, which will offset some of your losses. Because if the world gets through this phase and we look much, much more forward, whatever goes down will eventually come up. I think the next fall will be a deep one. I think it will be a really hard one, but I'm also pretty sure that if we speak again in many, many years, 5-10 years ahead, markets will be higher than they are today. So it's just about withholding when things happen. A lot of talk here. We were talking about quarter results, what to look for. So today will be Goldman Sachs, BlackRock will have their numbers. Tomorrow you will have retail sales, and the retail sales will just say the same thing, that consumer spending is changing. Consumers are changing their behaviors, but you will have more banks, Morgan Stanley, Schwab, Interactive Brokers will be tomorrow. On Wednesday you will have housing data, nothing really special expected there. On Thursday will be more about job numbers, and again, very easy to get confused because you see, job numbers came in better than expected, but you have to look at the numbers underneath. I believe unemployment rate will just continue to increase upwards. Right now it's not a huge problem because it's only 4.1%, but at some point it will be a much more significant problems. And while stock market likes it now because it takes the pressure away from the economy, it increases the chances of interest cuts, etc. In the long length, it's not good, because if you're without work, you cannot shop the same amount, you cannot invest the same amount. It just hurts the revenue line, and price earnings is a number you should learn because that will be one which will be mentioned a lot in this quarter results. Thursday, job numbers, as I said, we will have Taiwan Semiconductor will be one of the most interesting numbers this week, along with Domino's and Novartis. Friday, Halliburton. So these are quarter results to watch out for this week. And while remembering this, a user asked, so can you just give a little insight of what's happening in India and what you think about India? And of course, I forgot last week, but I have two stocks which I think might do good in India this week, and I'll tell you a little bit what I think about India in just a minute or two. But let's wrap up a little bit more. what is happening. So we have quarter results coming in, we have job numbers coming in, markets are in a very nice rising trend for Nasdaq. Oil steady at $82, was up at 83.84, then back to 82, remains very high. And I just like to point out that number. It means that the oil industry is making very good money, again, about dividends, but also about inflation, because I will not be fooled by falling numbers last week. Absolutely not. I don't think we're done with the inflation by any means. Have to remember, I just told you that PepsiCo managed to increase their revenues, but their actual volume fell because they were offsetting on the customers reducing. So instead of selling 2-liter bottles, they go to 1.5-liter bottle at the same price. Now they cannot do anything other. They have spent all their opportunities. You cannot keep shrinking. So your only other option, if you want to remain positive to an investor, meaning that you are able to have a profit, is to try increase prices to see if there is more room with the end consumer. And I think it was, let me see, it's one of these major, was it Costco maybe, who for the first time in 7 years will increase member fees while remembering. Gold had upturn last week. I believe it started on Thursday, pushing about 2,400, got up in all-time high, sitting at $2,410 as we speak. And am I happy that I'm in gold? Absolutely. I told you to be a very good investment, and I only see more upside for gold moving forward. Up by 1% over the week, was up at 2,425, I believe. We will soon be at the 2,500 level. I already increased it to 3,500. 10-year Treasury yield is one number we have been following over the years, and I told you when it goes up, market will go down, and it was down at 1. We followed it all the way up to 460-ish. I guess now it's at 419 after falling almost 2% last week. Was the expectations, because of the inflation, the expectations for a rate cut increased, so now they have increased for the September. We have to follow the numbers and see what will happen. Now we are 17 minutes into the podcast. Time to get close to the $1,000 challenge. First, the signals. What are the signals saying? Last week across all board it was 28. I said it's a number that easily can continue to go upwards. Currently sitting at 36% of all companies that we analyze, more than 40,000 stocks, have a buy signal. That is in the upper end, but looking at Nasdaq, only 21% has buy signals, up from 17 last week, indicating a little bit more room in Nasdaq. Going to New York Stock Exchange, up from 31 to 46% last week, tells me that I think it will be a hard week for some of the Nasdaq stocks, because we are getting at the very upper end, but we have been above 50. And if we get up to these numbers, that is usually when you will have the huge falls. It's been so many days of good market that we forgot how it looks like when the market are falling 3%. Last week we got 183 or whatever it was for Nasdaq on the Thursday. But we really forgot how it looks when market is down 3.5%. I think we are getting close to this period. Expect increased volatility. London 36% up from 26 last week. Frankfurt up at 49. I think maybe Frankfurt will be the first to lead the signs of slowdown. Maybe not this week, we will see. But if we go to Tokyo, Tokyo is also high up at 49. Both of them moved up from 40 last week to 49. Looking like market is overboiling. And first note about India. If you look at Nifty 50, the index for India is at 47% buy signals, very overbought. India been doing good lately, indicating that yes, it might continue, because we know these things. When things are good, they might just push, and when they overbought, they might push higher, but suddenly everything turns. I see the same signals for Nifty and the National Stock Exchange of India, that there might be a correction coming up any day soon. I like to develop, I told you this. Also, I like to develop algorithms trying to predict the future. Is one of the things that I really love to do. I work on it daily, and if I'm absent either on Discord or wherever it is, it's usually because I work on these things. And my personal new, it's not new because I already made it many years ago, but I enhanced it a little bit, showing market situation. Nasdaq just gave a sell signal. It'll be interesting to see if it follows up, if it will be, but has been somewhat accurate before. It will be very interesting to say that right now we are at a level where we should expect to see. But I've seen everything in the market. As I said, week after week now, we may easily go to 20,000, but then I think it's enough. So, National Stock Exchange of India, as I said, at 47% buy signals. And that being said, here are two candidates which I think will do good in India. Has a fair chance, in my opinion, to do good. Then I will follow it to US stock before we go to the $1,000 challenge. For National Stock of India and the Indian market, I just had a quick look, but I think Bharti Hexacom will do good. Very long ticker, it's BHARTIHEXA. Bharti Hexacom currently sitting at, I believe it will be rupee, 10,090 rupee. Has a hold buy signal from our system. Looked at it, I think it might do good, 1090. I will follow up next week just to see if it was somewhat correct or not, but to me it looks good. The second one we had as a buy candidate since April 19. It's already up 45.35% since our system said buy. You can check that yourself. Go to any stock at stockinvest.us and you will see, because we'll tell you how our recommendations perform. And you will see that you will see the number. And for Crompton Greaves Consumer Electricals, Crompton stock was first recommended as a buy 19th of April. Never had any other recommendation than buy or hold during this period. Up 45.35%. Currently sitting at $431 and 431.75 rupee. I hope it's a rupee. That I'm not saying wrong here, but. I believe it still has upside. To me, the chart looks very good. I still think it may go up. We will follow them up next week. The majority of you are not from India. You are either Norway, Germany, or US. So here are two stocks. One of them is actually a Norwegian stock, traded in US. So it will work as good in Norway as in US. Frontline looks like a possible good opportunity to me right now. Ticker FRO, Frontline, traded at $23.54 in US, but you can also trade it at the Norwegian Stock Exchange. It looks to me to have an upside. We'll follow up and see if I'm correct. About these stocks, which I mentioned, the two in Nasdaq, the first one in US, and I will soon mention the second one, is all the things that they have in common is that if the markets now fall, I think they can hold a little bit back. So these have somewhat low risk with some potential upside in my opportunity, in my view, with some somewhat okay opportunity. Second one is Take-Two Interactive's TTWO. Take-Two Interactive Software at $153.35 looks to me to have some potential. Again, I will follow them up if market takes a dive during the week. A hard one, none of these stocks may go up. But anyway, I'll follow up and tell you how it went how this week. I will tell you next week how it went. So there you have two stocks for India. Bharti Hexacom and Crompton for India. For you, my Indian listeners, very happy for your country growing the economy very good. Hope it will continue, and I hope that you will continue to listen to the podcast, of course. For US and Norway, Take-Two Interactive Software and Frontline, two candidates that I think might just do somewhat okay this week. 25 minutes into the podcast, here is the $1,000 challenge. Very simple, I bought NEO at 427. I stayed with it last week, it continued to push upward, ending the week at 487, up 14% since I bought it. I told you I have a huge stop loss on this one because it is very volatile. The $1,000 challenge, I started with $1,000 and we've been following the $1,000. I've been in and out of some stocks. Currently it sits at $3,838.43. I was hoping to tell you that we broke the 4,000s, but we are just under by $161.57. So this is the challenge. Can I grow it over the next week? Well, it depends, because I will still stay in NEO. I told you I think EV, and you heard me say this for some time now, that EV has upside. Go and look what Tesla done lately. Maybe it was a good advice. And while remembering, I told you about crypto. Very happy to see crypto have a very good weekend. Bitcoin above 62,000, I believe. Was I happy that I bought Bitcoin when Bitcoin hit 55? Yes, I am. Will it continue? Well, the chart says that there's a huge chance Bitcoin will continue to push upwards, but it is no longer in that same rising trend, which it was, so it might just be 65. I'm not sure yet, but speaking about diversification, I think it's good to have a small part into crypto. Very risky. Meme coins even worse. Meme coins, you should just consider your lottery ticket. Maybe you're lucky, because if things suddenly turns very fast and crypto goes up, so all these meme coin, Pepcoin, etc., they will follow hard up easy. You can do a 5 time, 10 time in some of these meme coins, but also get stuck with some shit that will maybe go back to zero or very close to zero. There is no free money, but I would advise a small portion in crypto is not bad to have. You never know anything. You hear me being a little negative about stock market, but I've been so long in the game, I know that the market can just continue upwards. I just weight my risk a little bit different. I do not want to sit fully exposed when things start to go south, and they may happen at any time. We saw the attempt of killing Trump during weekend. Just an example how fast things turn. We still have the war in Ukraine. NATO is pushing harder and harder to make these things escalate. And now we have lefts winning again in France, and especially UK increases all odds for things to go south very fast, because it just takes a half stupid person to say or do something stupid, and things can escalate very, very fast, out of control. This is not a scenario where I want to sit fully exposed in the market. So many reasons why I have money into gold, etc., to offset some risks, and other investments. I believe that sums up everything. I think I said most of the things. Still staying in NEO. If NEO goes on a run or it falls too hard, it will be sold. But for NEO and EV, they have been really hammered, they've really been hammered. There are some potential upside. They also delivered some somewhat good results. Now it's all about pushing cars, but also to generate the revenue from the push. I believe governments will continue to push money into green tech again. Been a little bit slow lately, but we will again see more money printing, especially with with the France election and the UK election, I think that we will see more insane money printing and financial mumbo jumbo, and I think that will benefit the EV sector. The EV sector was up. We had a natural downturn. I told you it would happen. Now I've been very bullish on EV for some time. I think they are way too far down. Hopefully NIO will go all the way up to 10. Realistic? I don't know, but still in NIO. Until next time, just have a perfect week. I hope that you get back to watch the next podcast, and that when you watch it, your portfolio is greener than when you were watching this. Until next time, just have a good week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.